are in listen-only mode.
Can you guys see my screen and hear me okay? For some reason my headset's not working, but I can use a different microphone, so hopefully that works. All right, let's go ahead and get started. It's a little weird without my headset on, but we'll try and make do. Let's go. So let's start with the S&P, looking really strong off of the I guess whether we're one of the things that we'll talk about is whether we count the actual February 24th low or whether we count something off of the March 14th or 15th low, and we'll take a look at the Nasdaq there because that is one thing that makes a difference in terms of our subwave count. But either way, we're looking really good. We don't yet have a clear 5 waves up, unless maybe we do count off of the March 15th low, then maybe we can count that as 5 waves up. But proportionately, what we're looking for a wave 1 of wave 5 of 3, but we can certainly still get a 4th and a 5th wave higher. We do, as we've talked about before, we would like our wave 1, and when we're talking about wave 1 of a larger 5th, we want that wave 1 to stay below a new nominal high, which in the case of the S&P is about 48.18, 48.20. The issue with making a nominal new high as 5 waves up is that can count as all of a much more muted 5th wave. So if we want this whole thing to extend well into the rest of this year and possibly into the start of 2023, then we want 5 waves up as wave 1 to stop a good bit before making an actual new high. It doesn't mean that if it does make a higher high that we won't get a bigger extended 5th wave. It's just it raises concerns that maybe that was all of a much more muted move. But that's one of the things that we look at the other sectors and individual names for context and what the other index charts are doing. So let's go into the smaller time frame. And we'll kind of take a look at a few of the ways to count this, whether that change a little bit of how we view. So the Nasdaq clearly made a lower low on March 15th, and so we do have to consider that a little bit. And while we say each chart on its own, we do have to take that into account of what we're looking for. So we have the best way of counting this, where it agrees with most of the other index charts and sector ETFs and a lot of individual names. And you can see the recording of the video that Mike Golombesky and I did for the Money Show, where we went into a little bit more detail with regard to the Nasdaq, is that this was an ABC up into the January high as the B wave in an expanded flat for the S&P. And then this is 1, 2, 3, a bigger than ideal 4th, and then a very awkwardly large 5th that fits in proportion to the 4th wave, but just looks a little bit big compared to the smaller 1, 2. But that completed a C wave down, and it stretched that C wave to get closer to our more ideal 38.2% retrace of the 3rd. We also hit other Fibonacci and Elliott Wave guidelines for where that 4th wave should have held. And we got a pretty bullish looking move off of that low, counted as 5 waves up. We held a higher low, even though it was a much deeper than ideal retrace for that parentheses lowercase Roman numeral wave 2. We got a move off the low, which counted as 5 up for a leading diagonal in the ES futures, but did not get a regular trading hours higher high for the 5th, the micro 5th of wave 1 in the S&P. So that's also something that we have to pay attention to. But then got a lower low under that in the ES, so it's kind of moot there. But did not make a lower low, but got him very, very close in the S&P. So we have off of that March 8th low another possible 1, 2, and are filling out the rest of 5 waves up as our third inside our minute degree wave 1 of 5. So we want to see 5 waves up there. Now, if we just count off of the March 14th low or 15th low in the Nasdaq, then we can count this as 1, 2, 3, 4, 5 waves up off of that low, and might be due for a wave 2 already. That move looks a little bit small, just in terms. I mean, it's in the actual measure of points in the S&P. This move is not much smaller than starting from here and getting another higher high. But just the look of this move by itself looks a little bit small for wave 1. But if we get, this instead of a 4th wave to the 4480s, maybe that's an A, and then we get a B wave and a C wave down, and that could be all of a wave 1 and a wave 2 start already. The other way of counting this that's only slightly different, but actually looks a little bit better in the Nasdaq that we'll look at in just a second, is counting this as an ABC down. But in the Nasdaq, that can be an ABC of a Y wave, because the Nasdaq does really clearly count a lower high for this as a B or an X wave there. But instead of the overly large 4 and 5, especially because it did make a lower low here into March. But zooming in just a little bit gives us a nice path forward for the rest of our 5 waves up for the larger 5th wave. As Garrett showed, we can get a micro move a little bit higher towards maybe 4680s for this 3, but easily counts as already starting the 4th. So we'll just see if it holds as a corrective bounce from the move down today in the 46, probably 4620s or 4630s. And then, or whether it tries to get a little bit higher and then starts the 4th wave. That 4th wave, as we said, should hold support, 4490s, 4480 region, and then get another high up towards the mid and possibly even higher 4700s. ES, very much the same. Let's go to our nano counts over here. And here on the nano counts, you can see in a little bit more detail that we got almost to a lower low, similar to what the Nasdaq did here on March 15th, pre-market, before the S&P opened. So we can still count that as the wave 1 and the wave 2, and then that still has this as the topping in the 3rd, or just starting fresh off that low, even though it's not an actual lower low. We can just get 1, 2, 3, 4, 5, possibly, but ideally even here it still counts better as the 3, and another 4, 5 to complete a better 5 waves up. So then when we take a look at the Nasdaq, we can see Nasdaq also, again, as we talked about a lot last time, this is 1 degree ahead of the S&P, so it already looks like this is the intermediate degree wave 4, so it's only going to get this 1 intermediate degree 5th wave, and then should start to diverge from the S&P, which might get yet another 4th and 5th wave up to a nominal, at least a nominal higher high over this, and this move could certainly extend. But at the smaller degree, I think we need to go to the big macro clean tab here. And we'll zoom out to a 15-minute that we can see. Actually, let's go to a 20-minute. There you go, 20-minute. We can see that March 15th low. We can see this coming into the top of the 3rd, maybe allowing for, if this is an ending diagonal, or even if it's not an ending diagonal, this can be 1, 2, 3, 4, and 5 inside that parentheses lowercase Roman numeral 5 of 3, so 1 more high up towards 15,370-ish, and then can get the 4th wave, which should hold the 14,500s, and then a 5th wave up towards 15,500 to 15,600, maybe even a little bit higher than that, and then needing a wave 2. So that's what we're looking at the larger degree. I've been following the smaller degree a little bit closer here on the Nasdaq. So this morning, yesterday we had the potential for maybe being all of this third wave up and being able to start the fourth. Got a little bit of a fade down. This morning looked like we had a B wave rally and there was a small window to try and turn down. We got a sharp measured move down as that C wave, the sub-micro C, then started another bounce. Didn't quite look satisfyingly complete as the micro B wave, but it did get to a 618. We said maybe it was going to hold and get a wider flat, but it ended up just leaking down. Also got to 100% extension of that micro C wave down, and now looks like we're bouncing in the sub-minuet B wave, which can be in the start of the minuet BA of our minute circle lowercase Roman numeral 4, which is down here on the 5-minute chart. You can see it squeezed in. Again, if this low of the day holds, then we can be trying to head up towards the 15,300s for a nominal higher high in this third, and then restarting the same parentheses ABC move down for a fourth wave, which should ideally hold support in that 14,500s, as we said. Let's take a quick look at the Dow. Oops. There we go. The Dow. Again, very similar. It more clearly held a couple of higher lows than the S&P, so it was stronger into those bottoms than the S&P, and certainly stronger than the Nasdaq, but finds itself in exactly the same spot. This looks like a micro 3-4. We should go ahead and snap that in place. Didn't get to do it while I was away. And could get one more high here as the fifth of this micro fifth of 3. We have 35,525 is the exact 1618. It doesn't have to hit that. Should hold the 34,500s for the fourth, and then get a fifth wave up towards the 36,000 region for its wave 1. In this, similar to the S&P being 1 degree behind the Nasdaq, or the Nasdaq being 1 degree ahead of the S&P, the Dow looks like it is yet 1 degree further behind. So we could get yet another 4-5 after the S&P gets its additional 4-5, which would fit in line with a more significant, larger degree major top, where the higher volatility tech names and maybe the Russell puts in its top first, and then the Nasdaq gets another high after that, then the S&P gets another high after that, and then the Dow gets a final high after that, and all of the others are diverging before we really mark a major long-term top in the equity markets. Okay, good. Some questions here. So if I understood you correctly, the count in the Nasdaq is a degree ahead of the ES. Yes, ES and S&P are the same, and the Nasdaq counts is already in the parentheses 5 at intermediate degree, whereas the S&P counts best as being in the minor degree 5 of the parentheses third still. And the Dow looks like it is in the minute degree 5th wave of the minor 3, still inside the intermediate 3. So we'll have a couple more moves higher, likely diverging with the rest of the market. So now let's take a quick look at the Russell. I'm not crazy about the structure in the Russell, although I do like it for making a higher high. I think that this fourth wave, what we were counting as a minor degree fourth, even though we didn't break and invalidate for this being an impulse, I think the deep fade that we got for the alt wave 4 now really counts better as the larger degree intermediate 4 of a diagonal. So I'm looking for an ABC move up to a higher high. That can fit in line with maybe a more muted top for this move with the market, and then making a higher high with the Nasdaq, and then that being more terminal top for at least for the next period of time for the Russell. But certainly a lot of good trades to be had here. Just counting this because I'm looking for an ABC move up for that parentheses wave 5, that A of the ABC can also be an ABC move. And this A of the ABC move can also be an ABC move, and this actually could have already completed here. Does allow for holding the 2040 region and then getting another high up towards 2180. So I don't think this is necessarily starting the B wave already, but it could be. So I'm a little bit agnostic to the IWM itself at the moment. There's a lot of our setups in stock waves come from the small caps, but I prefer each of those charts on their own. We can see some similar structure here in a lot of those things where this can be a wave 1, wave 2, and we need to get a little bit higher as a 3 and then get a 4, 5 for 5 waves up. We can see some other ones where this is a little bit more muted, and this can be 1, 2, and maybe an A, B of a third, and then still need a 4, 5 of a leading diagonal. I think that there's not as much of a consensus of all of the Russell stocks. It's much more of an equal weight of, 2,000 names, or actually it might even be 3,000 names. And so there's not any single stock that's putting a lot of pull on it. Stelton says, Zach, I've been reading EW and watching webinars in the education section. These presentations seem high level for newcomers. Am I missing something? Unless you ask me some more specific questions, I don't know the purpose of the webinars is absolutely for you guys as a beginner circle webinar for you guys to ask questions. With a lack of any specific questions, then we kind of just give a broad overview of where we are in some of the things that are covered in the markets. And as questions come along, then we can talk about, answering those in terms of Elliott Wave questions. Fred says, A waves can sometimes be 5-wave moves. When that happens, how can you identify them as A waves versus wave 1? That's an excellent question, Fred. A lot of it has to do with a larger context. If you're looking for the start of a 4th wave, for example, going back to, let's just pull up an ES chart because it might be easier than trying to fight with motive wave to get to the S&P. So right here, we're looking for a 4th wave to possibly start. We could get one more high in the 3rd still, up towards 46.48 or 46.58 in either of these 3s, but it's not necessarily needed. But here, we're looking for a 4th wave, and we know the 4th wave should be an ABC move. So if we see, even though maybe this looks like 1, 2, 3, 4, 5 of a leading diagonal, I don't think it really counts as a leading diagonal. I think this is more of an ABC move. But let's just say we wanted to count this as 5 waves down. Because we're looking for an ABC move as a 4th, we wouldn't automatically say, oh, this looks like 5 down, it must be wave 1, and we're getting a major bearish move starting. We'd say until this shows us that it's maybe 5 waves down and more than the ABC that we expected for this wave 4, then maybe we'd say, okay, well, this is only 3 waves up so far. And then if we get a bigger 5 waves down and not ABC for a 4th, but we get 1, 2, 3, 4, 5, then we would put a wave 1 on that and say, there's a risk of more downside. Yeah, we can cover the natural gas. We'll get there in just a minute. Blue is asking about a larger degree. That's certainly, there is a possibility that this was not all of the wave 4 and that this is an A wave, and so far we only have 3 waves up, and this is a B wave, and we're going to get a C wave down here, but it doesn't fit with the context that we see in most other individual stocks. Even if that I was more open to that in the Nasdaq, But even if that's what we have in the Nasdaq, we got to a 382 retrace for all of the larger degree. And if this isn't all of the larger degree, if it's only our yellow A wave, then our B wave should come up a whole lot higher here and fill out a C wave of a wider flat. So I have that in my faded mustard yellow. And this move up would probably be just the A wave of this B wave. So that's where we're also, if we can't hold as a fourth in that small decline that we were looking at in the smaller time frame, and we drop deeper, then as long as it stays corrective, then we can still look for a move up from there towards the 16,000s. But that might be an A and a B wave, and then we're just looking at a C wave up for this B, and then we have to worry about a wider flat for the larger degree wave 4. But when we look at something like the equal weight RSP, which has been a guiding light for Garrett and I, especially because it does smooth out some of the distortion that we see in the broader market from some of those big high-flying tech names. We have a much clearer 5 waves up for our intermediate degree wave 1. We have our wave 2 retrace into the later June low. 1, 2, 3, 4, and filling out, starting that 5th wave up towards our normal 138.2% fib target that we see based on Fibonacci pinball, especially after our third of the third hit the 100%, and then we got a nice flat consolidation for a wave 4 exactly between the resistance and the support levels that we expected to see, and are working on 5 waves up. So until this proves to be something more than a 4th wave in 5 waves up, based on the context that we expect, we shouldn't automatically start worrying about the sky falling when everything seems to be so uber bullish. That is my way of approaching it. That doesn't mean that we shouldn't ignore that potential, but that our bias should be looking for support to hold and then adjusting if it doesn't, rather than bailing on everything. I've certainly taken some nice profits from buys that were made down here when we posted down here and down here and down here. We posted our June 28th, our 70 picks and stock waves for 2022. A lot of those have done incredibly well. Steel names have done incredibly well. A lot of tech things that we got and have trimmed some profits on those. But I think it would be irresponsible to batten down the hatches and bail on everything and go to cash for what should be a small degree wave 4 when everything is much more in line with bullish moves off the low. Now, if it gets more than an ABC and more than a 4th holding a 4th, then we'll make adjustments as needed. Similar to that, we have our equal weight Nasdaq, which looks like this should get still a 4th and a 5th of a larger wave 1. Could count this as wave 1 already, and could even get one more high, whether this is wave 1 or just the 5th of the 3rd, but bigger drop than the regular Nasdaq today. This actually closed down 2.5% when the Nasdaq ended up getting back up to a little bit better than break even. All right, let's move on to, we'll take a look at oil and natural gas first, and then we'll go look at the metals. There's my tab. All right, so I'm counting oil the same way as Garrett and I are counting a lot of the energy stocks, and have been counting a lot of the energy stocks off the August low. We were looking for a 5th wave up. The structure that we got off of the August low into October had us on the lookout for a wave 2 retrace in an ending diagonal. That got much, much deeper in oil, almost invalidating and possibly counting better as a wider flat. But it held clearly as our wave 2 of that ending diagonal in most of the XLE, XOP, and all the names that we track there in stock waves. Also don't have a very clean A and B. We had a really good ABC up for an A wave, but got almost nothing of a B wave. But can count 5 waves up off of this January low as the C wave with a very extended, exaggerated blow off top fifth of that C wave, well past our targets for the whole diagonal, but it did hold as a fourth and are looking for an ABC move up, which should get us at least to the 145 level, and I think easily closer to 160. Should hold 98.90s as the A and the B inside A of that fifth, and then probably going to break this trend line again for the B wave. It'd be nice if it would hold there, but I would allow for a break to come back down closer to 110. But this move off the low certainly looks like wave one of the C wave up there. Again, similar to what we talked about as far as that fifth wave, if this gets a higher high above the 3, which would be anything above 131, then you have to be worried that this is all of the fifth wave completing. So if we want more of a blow off top, then this C wave of A needs to hold around 129.50 or maybe even a little bit lower. And then get another B wave, and then you can get a major blow off top in oil. But if this move off of the 98.90 level goes up to make a higher high over 131, then there's a very good chance that that could be all of that move. Maybe that stretches and it gets to 145 and that completes the entire move. But whatever that move is, if it does make a higher high, I would not rely on this holding as a B wave. If we're gonna get a clear 5 waves up and hold in that 125 to 129, then maybe I would still take a good amount of profit on any trades in oil, but you can be a little bit biased in favor of the B wave holding support, although I would certainly plan for that move to come down towards the 110 region as an ABC. And then if it failed to break, it failed to hold 105, then start to worry about a major top in place, possibly even as a truncated top. But if that does make a higher high, you really have to be careful that that was all of it. Moving on to natural gas. I've been counting natural gas at a much larger degree diagonal than the one that we were just looking at in oil. Let me hide some of these fibs so that we can see the subwave structure underneath. It was a concern that this was a larger wave 1 of the C wave, but I think it's held as the 1-2-1-2 and is filling out nicely in the heart of the third of the C of wave 5. And this could complete a larger degree C wave up in natural gas. And I typically tend to view a lot of these commodities that are not oil, that are not gold and silver, as more of an oscillator. So, even if it looks like they're getting impulsive structure at a larger degree, I would tend to say that a third is usually just a C wave, even if it's more exaggerated. But should get more of a move up towards the 595 to 6 region to finish up this wave 3, hold a fourth wave in the 550s again, and then get a fifth wave of the third up towards 680s, then hold again in the 590s as a fourth, and then get a blow off top to 790 and possibly into the 8s. At a slightly smaller degree, this can be just a microwave 1 inside this fifth. So it can pull back, should hold support about 537 now, I think, for natural gas. All right, let's take a look at gold. Gold actually still following it. While the time frame of the rest of its diagonal is very different from oil, into this high, they came into perfect alignment. So gold is 1 degree larger. Its diagonal started back here in March of 2021 for a primary degree, but they both filled out a wave 4 and are working on an ABC up for the 5th wave. I think this is going to be the top of, probably line up with the top of the one in oil, and then gold should get another BC after that. But very similar structure to what we were just talking about in oil, so don't need to go into too much detail there for the gold one. Really don't want to see it at all below 1890 now. Silver is not anywhere near as clean as gold. For starters, it made lower lows, not just back here in September, but also again in December. So anything that we're counting, whether it is the start of a 5th wave or whether it's a B wave or the start of a C wave, really has to start off of this December low. And the first move off of that was only an ABC move up. So that was either wave 1 of a leading diagonal, which I have here in purple. And it can't even be this ABC anymore. It really shouldn't be if it's the start of something more bullish. Or it can be A, B, and this could count as 5 waves up for a C wave. And I have that as a possible wave 1 in blue. The only issue with that, we were filling out nicely as a potential A, B of the blue wave 2, but stopped too short. And then this looks too big to be a 1-2 of a C wave, because that would take this way too deep. So this looks more like a muted C wave of this purple wave 4, and we're going to try and get an ABC up for the 5th in this purple leading diagonal. That proportionately looks like it could fit as the wave 1 of this purple C wave up. But really, silver's pretty messy. Not such a fan of the chart at the moment. GDX, not quite as bad as silver, but it came very close to invalidating the October low in January here. Well, it came very close in December, and then again in January it made a lower low from December, but still did not technically invalidate a start off of the December low. So whether we're counting off of the December low or off of the October low, or off of the January low, we can still be working on a slightly larger wave 1 off of the low in the start of this much bigger, where'd that go? There we go. Much bigger C wave of a primary wave 3. My preference initially was yesterday or last week was to get more of this purple wave 4, but when we zoom in on the structure, here was the more ideal spot to turn down to get the A, B, and then a C wave down. It was trying to fill out more of a wider flat, of a higher B wave and a wider flat, but stopped shy of getting a 5th wave up in this pink C, and instead of turning down and getting 5 waves down, it looks more like this is now 1, 2, 3, 4, 5 waves up and 3 waves down, as a more bullish start to the 5th wave already in purple. Can be, I guess it could be all of wave 2, but I don't think this is a reliable low for all of the wave 2. But as long as we're holding the 3670 level here in GDX, can at least target the 41 region as that purple A, B, C for the 5th wave, and then restart an attempt at a more normal wave 2 from there. What else do we usually cover in our webinar here? Probably the bonds. I'm not going to look directly at TLT right now because TLT is kind of a mess. We'll pull up the larger degree chart on the 30-year bond, which I think really pushes direction for the 10-year as well as TLT. And as I posted my update in the market section on EWT the other day, we have to, we have to now consider the way that this extended. We were looking for, from here, we were looking for a potential fifth wave down of this orange C to a nominal lower low. But the way that this stretched, it looks more like 1, 2, 3, 4, 5 waves down now. Or 1, 2, 3, 4, 5 waves down from this high. So this higher high, either this was all of our cycle degree wave 5, or this was an A and a B wave, and this is 5 waves down as the C wave for an alt expanded flat of the cycle wave 4. And if that's the case, then we should be getting a new A, B, C wave up in the cycle wave 5 in purple, or at least a corrective bounce if this is 5 waves down from a more terminal top. We can still count this as the A, B, and 1, 2, 3, 4 in a very stretched C wave for our primary degree B here. So we'll look for a possible 5 waves up to form as we were originally counting, but we're going to be more open to this being an ABC up, and possibly that's all of the A wave, or at least the A wave of the A wave in our purple count, or just an ABC up as a corrective bounce before something much more bearish for bonds. So we will be on the lookout for that corrective structure into resistance, and that's going to have a pretty big bearing on what TLT is going to do. Let's take a look at the dollar. I haven't looked at the dollar in a little while. Keep getting higher in this possible B wave. We now stretched up to a possible 764 retrace of the initial move down, but can more easily count that as an A, B, and 1, 2, 3, 4, 5 waves up and a stretched C wave down. So there is the potential for the dollar to start trying to reverse and at least try and work on a measured move down, which at this point would take it down to the 85 region. But so far, only a corrective move off of the high. So certainly nothing indicative of a major top forming. But if this is, even if this is something more bullish, if this is 5 waves up, which I don't think it really counts well as 5 waves up, but if you were going to force that as 5 waves up, and you have another 5 waves up here, should at least try and consolidate soon back towards the 95 to 94 region. If this is 1, 2, 3, that would be a 4th, and then maybe you get a 5th wave up to new highs in the 106 level. Jeff, I don't think there's any difference between my count and Avi's count on ES. I think the only difference is that you can count at this point on ES. I mean, you do have to worry about this getting more than a 4th wave if it's not going to clearly hold an ABC down for a 4th. But whether you're starting off of this low or off of this low, you're still looking for a 4th and a 5th wave up to get 5 waves up off the low. So maybe his subwave counting is a little bit differently at the micro. Maybe he's leaning more heavily on what Garrett posted, with this being 1, 2, 3, 4, and getting a micro 5th wave up. But at the end of the day, you know, with as far as what we have for clarity, you know, there's not a lot of different ways of counting this at the moment. So a lot of those just rely on seeing getting clear corrective consolidations to hold support. What else do we usually look at? We looked at oil, we looked at the dollar, we looked at bonds, we looked at miners. What am I missing? Any other questions, guys? Am I missing anything? Or did we end early? All right. I guess we'll go ahead and stop there. I'll get this uploaded for you guys, and I will see you next time. Have a good night.